When you think of classic American food, what comes to mind? Is it the sizzle of a burger on the grill, or the sweet aroma of freshly glazed donuts? Two names immediately stand out in this landscape of iconic eats: McDonald's and Krispy Kreme. They've both become deeply embedded in the American culinary identity. McDonald's, with its globally recognized golden arches, is practically everywhere, a beacon on highways and in city centers alike, serving up burgers, crispy fries, and those nostalgic Happy Meals to generations of families. It's a taste of childhood for many. It's a symbol of speed, consistency you can count on, and the everyday convenience that busy lives demand. A quick bite that's always there. Krispy Kreme, on the other hand, is all about the simple magic of that mesmerizing "hot now" sign beckoning you closer, and the irresistible pull of sinking your teeth into a fresh, warm donut, still glistening with its sugary glaze. Their donuts are more than just a snack to grab on the go. They're a shared experience, a little celebration of sweetness and joy. While McDonald's often represents a reliable routine, a familiar comfort, Krispy Kreme is all about that delightful, well-deserved indulgence. So when these two iconic brands announced a surprising partnership, the business world took notice. It felt, at least on the surface, like a match made in food heaven, a pairing that could redefine the fast food landscape. McDonald's offered unparalleled reach, thousands upon thousands of locations strategically placed, open early in the morning and late into the night. Krispy Kreme brought the undeniably crave-worthy product, a treat that customers actively seek out, especially during the breakfast rush. The core idea was simple yet compelling. Grab a Krispy Kreme donut alongside your McCafe coffee anytime you wanted, practically anywhere you were. It promised to seamlessly combine McDonald's massive and efficient distribution network with Krispy Kreme's reputation for delivering premium, melt-in-your-mouth donuts. For McDonald's, this partnership represented a golden opportunity to significantly upgrade their breakfast offerings and directly compete with established players like Dunkin' and Starbucks. For Krispy Kreme, it meant gaining instant access to a vast network of potential new customers, all without the considerable expense of building and operating new stores. The initial announcement generated a palpable sense of excitement and anticipation among consumers and industry analysts alike. Customers, it seemed, were genuinely ready and eager for this sweet and unexpected collaboration to finally come to fruition. On paper, and in theory, it looked like a resounding win-win situation for everyone involved, from the corporations to the consumers. The potential for growth and increased market share was undeniably huge, and the initial media buzz surrounding the partnership was overwhelmingly positive. But, as with any ambitious and innovative idea, the real and ultimate test of success would lie in the flawless execution of the plan. The partnership between McDonald's and Krispy Kreme, a seemingly unlikely alliance, officially kicked off in October 2022. This marked the beginning of an experiment that had the potential to reshape the fast food landscape and redefine how customers experience their favorite treats. The initial phase of this ambitious collaboration began with a pilot program in Louisville, Kentucky. This vibrant city served as the testing ground for what could become a nationwide phenomenon. Louisville's diverse population and established McDonald's presence made it an ideal location to gauge customer interest and operational feasibility. At select McDonald's locations within Louisville, customers were greeted with a delightful surprise: Krispy Kreme's most popular donuts, prominently displayed alongside the usual menu items. McDonald's employees carefully arranged these sweet treats, ensuring they were presented in an appealing and tempting manner. Among the offerings, the undisputed star was the iconic original glazed donut. Its signature sheen and melt-in-your-mouth texture were instantly recognizable, promising a moment of pure indulgence. This classic treat was poised to become a major draw for McDonald's customers. The primary goal of this pilot program was to determine whether fresh donuts could seamlessly integrate into the fast-paced and highly efficient McDonald's environment. Could the existing infrastructure handle the addition of a new product line that required special handling and storage? For McDonald's, the partnership represented a strategic opportunity to boost breakfast sales, a crucial segment of their overall revenue. By offering a tempting new option, they hoped to entice more customers to start their day with a visit to the Golden Arches. The aim was to attract morning customers with a premium treat, something that elevated the typical fast food breakfast experience. The allure of a Krispy Kreme donut was expected to draw in those seeking a more indulgent and satisfying start to their day. For Krispy Kreme, This collaboration presented a valuable chance to expand their innovative hub-and-spoke model, a system designed to maximize freshness and distribution efficiency. This model relies on central kitchens, or hubs, that produce fresh donuts daily, which are then delivered to various retail locations, or spokes. This ensures that customers always receive donuts that are as close to oven-fresh as possible. McDonald's, with its vast network of restaurants, offered a massive new spoke for Krispy Kreme's distribution network, a scale of expansion that was previously unimaginable. This partnership had the potential of reaching millions of potential customers who might not live near a Krispy Kreme shop, bringing the joy of fresh donuts to underserved areas. The public response to this unexpected collaboration was immediate and overwhelmingly enthusiastic, exceeding even the most optimistic expectations. Social media platforms buzzed with excitement and curiosity as users shared their thoughts and experiences with the new McDonald's Krispy Kreme offering. In the test market, customers eagerly lined up, sometimes for extended periods, to try the novel combination of McDonald's and Krispy Kreme. This simple yet satisfying idea of pairing a hot McCafe coffee with a fresh Krispy Kreme donut proved to be incredibly appealing to consumers. The convenience of grabbing this delightful duo at the drive-thru made it an irresistible option for busy individuals seeking a quick and tasty treat. Both McDonald's and Krispy Kreme quickly recognized the potential for increased customer traffic and significantly higher sales figures as a result of this partnership. From the outset, the partnership appeared to be a mutually beneficial arrangement, a true win-win scenario for both iconic brands. McDonald's stood to gain by attracting new customers who might not typically visit their restaurants, expanding their reach and diversifying their customer base. Simultaneously, Krispy Kreme's brand was poised to experience an unprecedented surge in visibility, reaching a wider audience than ever before. With positive customer feedback and encouraging sales data, the pilot program was off to a remarkably promising start, fueling optimism for the future. As the initial results poured in, hopes soared for a nationwide rollout, envisioning a future where Krispy Kreme donuts would be readily available at McDonald's locations across the country. However, despite the promising beginning, the real challenge of scaling this partnership and ensuring its long-term success was just beginning to unfold. The pilot expanded quickly, moving from a handful of locations to over 160 McDonald's in Kentucky. The test was designed to answer big questions. Could Krispy Kreme deliver fresh donuts daily to busy McDonald's restaurants? Would customers keep coming back? Early results were strong. Donuts sold well, especially at breakfast. Customers added them to their orders, boosting average sales. The brand seemed to have found a winning formula. But behind the scenes, cracks were starting to show. Scaling up meant more pressure on Krispy Kreme's production and delivery systems. Delivering thousands of fresh donuts every morning to hundreds of locations was a massive logistical challenge. The strain on operations grew as the test expanded. The data looked good, but the complexity was mounting. The dream of a national rollout was suddenly looking a lot more complicated. The pilot had revealed both promise and problems. In early 2024, Krispy Kreme announced a pause, a strategic timeout, if you will. This pause directly impacted the nationwide rollout plan with McDonald's, a highly anticipated venture. The news came as a surprise to many, given the initial excitement surrounding the partnership. Despite strong sales figures and positive customer reception during the pilot program exposed some major operational hurdles that needed to be addressed before a full-scale launch could be considered. These challenges were significant enough to warrant a temporary halt to the expansion. The biggest issue: capacity. Production capacity, to be precise. Krispy Kreme's hub-and-spoke system, a logistical model designed for efficient distribution, wasn't initially built for the sheer scale that McDonald's required. The existing infrastructure simply couldn't handle the massive demand. Supplying thousands of restaurants meant building new production hubs from the ground up, hiring more staff to operate these facilities, and investing heavily in specialized equipment and a larger fleet of delivery trucks. The associated cost and logistical complexity were enormous, presenting a significant financial undertaking. Delivering fresh donuts daily, ensuring the highest quality to over 13,000 McDonald's locations across the nation, was a logistical mountain that required careful planning and execution. Rushing into a nationwide launch without addressing these issues risked damaging Krispy Kreme's long-standing reputation for freshness and quality. The pause wasn't about a lack of customer demand or interest. The donuts were flying off the shelves. Instead, it was fundamentally about the limits of what Krispy Kreme could realistically and sustainably deliver, given their current infrastructure and resources. The company needed to step back and reevaluate their strategy, and thoroughly assess whether the potential risks and the massive investment required were ultimately worth the potential reward. The initial excitement and optimism surrounding the partnership had unfortunately collided head-on with the harsh reality of large-scale logistics and supply chain management. The dream of nationwide Krispy Kreme donuts at McDonald's was temporarily on hold, pending a hard, honest look at what it would realistically take to make this ambitious partnership a long-term success. Sometimes, even the very best ideas, the most delicious dreams, need a serious reality check to ensure they can be brought to life sustainably and successfully. The core problem was cost. Expanding production, buying equipment, and building a delivery fleet would require massive investment. Quality control was another hurdle. Krispy Kreme's brand depends on perfect fresh donuts every time. Ensuring that standard across thousands of McDonald's locations was daunting. The risk one stale donut could hurt both brands. The partnership also strained Krispy Kreme's existing operations, threatening their core business and other retail partners. The economics just didn't add up for a national rollout. The sweet deal was starting to look unsustainable. Sometimes scaling up means scaling back expectations. In May 2024, Krispy Kreme's CEO, Josh Charlesworth, addressed the decision head-on. He called the pilot a success in sales and learning, but admitted the national rollout was too complex and costly. Both companies agreed. The supply chain demands were simply too great. The investment needed to build new production hubs and expand delivery was more than Krispy Kreme could justify. The potential profit didn't outweigh the risk. Charlesworth praised the teams and the partnership, emphasizing there was no bad blood. The test was valuable, and the decision to pause was mutual and pragmatic. It wasn't a failure. It was a smart, strategic pivot. Both brands learned what it would really take to scale. Sometimes, the best business move is knowing when to walk away. The experiment ended, but the lessons would shape future strategy. For Krispy Kreme, it was about protecting the brand and focusing on sustainable growth. With the decision made, the pilot program in Kentucky began a gradual wind-down. No drama, just a professional, orderly conclusion. By the end of May 2024, Krispy Kreme donuts disappeared from McDonald's menus. Customers in the test markets lost a sweet convenience, but both companies managed the transition smoothly. The end was announced jointly, emphasizing the mutual decision and avoiding negative speculation. Employees simply stopped receiving donut deliveries. Krispy Kreme could now refocus on its core business and other retail partners. The partnership closed, but both brands preserved their reputations. Sometimes, ending a chapter is the best way to start a new one. With the partnership over, both brands are moving forward. McDonald's will likely double down on its own bakery items, learning from the Krispy Kreme experiment. They may seek simpler, more scalable partnerships or invest in their McCafe bakery line. The lesson? Keep things simple, efficient, and true to the McDonald's model. Krispy Kreme, freed from the pressure of massive scale, can focus on smart, sustainable growth. They'll strengthen grocery and convenience store partnerships and open new shops at their own pace. The experience reinforced the value of their premium special occasion brand. Sometimes, being a little less accessible keeps the magic alive. Both companies will grow, just not together. The future is about excellence, not ubiquity. The McDonald's and Krispy Kreme story is a lesson for business. Even perfect-seeming partnerships can falter if operational realities aren't considered. The pilot did its job. It revealed the challenges before a costly mistake. Ending the deal wasn't failure. It was smart, data-driven decision-making. Both brands handled the conclusion with professionalism, protecting their reputations. The door remains open for future, smaller collaborations. The real takeaway: logistics matter as much as branding. Great ideas must be executable and profitable. Sometimes the wisest move is knowing when to walk away. For both brands, this chapter will inform smarter strategies for years to come.